Hello and welcome to this extended edition of the Market Update. I'm Georgie Frost. Now we're halfway through the year, so we thought we'd take the opportunity to take a stock check of the digital assets landscape. Over the next 15 minutes, we'll be focusing on the trends that have shaped digital assets in the last 6 months, the factors impacting the technology that underpins the asset class, the evolution of altcoins, and changes to the regulatory framework. We'll also look ahead to what might happen in the coming months. Cryptocurrencies started the year on the front foot as US regulators approved a Bitcoin spot ETF in January. The move opened up the asset class to mainstream investment for the first time, facilitating greater engagement between traditional finance and the digital assets sector. However, concerns about volatility and security underscore the challenges that lie ahead, and the sector is attracting increasing regulatory scrutiny. Well, joining me now to discuss all of this is CoinShares Head of Research James Butterfield and Research Analyst Max Shannon. Welcome to you both. James, to you first. What have you witnessed over the last 6 months?
Well, this year so far has been a fantastic year for crypto assets in general, but I must admit the primary focus has been Bitcoin, primarily because the SEC, that's the regulator in the United States, approved a Bitcoin ETF, something that's been in the waiting for the last 10 years. It's led to a huge amount of hype for Bitcoin, and we've seen $16.1 billion worth of inflows so far this year. So fantastic year, the best year ever compared to 2021, which was 10.6 billion. So a great year. But very much the economics around Bitcoin are reasserting themselves. So it's very closely correlated to interest rates. So interest rate expectations are quite subdued at the moment. So when we see the first cut, it's likely to be quite supportive for Bitcoin.
Max, just explain in more detail, if you would, how macroeconomic conditions affect digital assets.
Sure, so as James said, Bitcoin is an interest rate sensitive asset, which means that when interest rates get cut, Bitcoin tends to move up in price as well. And this has mostly been the case up until the Bitcoin ETF got approved. And because of it had such strong flows early on, that dynamic has essentially, did diverge up until the point at where those ETF flows started to weaken. But the overall relationship is essentially that Bitcoin is a hedge against monetary debasement and policy error, but in the short term, it responds well to lower interest rates.
Okay, with all of that in mind, what's happened over the last 6 months and the macroeconomic conditions, what are you expecting for the next 6 months, James?
The spotlight is very much on Ethereum with the launch of its ETF and the approval by the SEC. If we look at Bitcoin, it was a very successful launch, the ETF. We saw these $16 billion worth of inflows. Ethereum represents around 20% of Bitcoin volume, so we could see around $2 billion worth of inflows into the Ethereum ETFs in the coming quarter. So a very supportive thing for Ethereum, but it's been very much unloved by investors so far this year. And I think we have to think of some of the fundamentals around Ethereum. It's seen a 250% increase in active addresses, and that and the combination of being very unloved, I think could be very supportive for Ethereum prices going forwards.
And Max, what's your view in the context, particularly of the macroeconomic environment?
Yeah, our base case macro story is essentially threefold. It's weaker job growth because of slower hiring and rising layoff, coupled with lower inflation, as James mentioned a few times, but also kind of rock bottom housing demand as mortgage rates stay high as compared to the past few decades, and finally kind of squeezed consumer-facing margins as consumer demand further dwindles down or ends really. But all of this is to essentially say that we do expect a larger and later cut by the Federal Reserve, around 50 basis points towards year end, and this should have a really supportive impact on the Bitcoin price because it's an interest rate sensitive asset and it's a hedge against monetary debasement and policy error long term.
Max, James, for now, thank you so much. Now, the infrastructure that underpins digital assets is one of the factors setting it apart from traditional currencies. Here too, there's been a lot of activity in the first half of the year. Alex Schmidt has been taking a closer look.
The first half of 2024 was an eventful one for Bitcoin miners. The price rally following the US spot ETF approvals provided a lifeline to companies in the tail end of the cost curve. Publicly listed miners began receiving machines from the large orders placed at the end of last year, increasing aggregate hash rate by around 22% between December and May. We have also seen movement towards consolidation in the industry. A major highlight was Riot Platforms' $950 million bid to acquire Bitfarms, which was initially rejected by Bitfarms' board. Riot now holds nearly 15% of the company, but a poison pill strategy should prevent Riot from further stake building. Although the deal may still go ahead, it now seems unlikely in our view. Another major development in the industry was the diversification initiatives into HPC and AI data center businesses, as companies aim to reap synergies with their existing Bitcoin mining operations. Bit Digital is already generating significant revenues from AI, and Core Scientific's $3.5 billion contract announced in May sparked enthusiasm amidst the industry, with HPC and AI-exposed companies significantly outperforming pure-play Bitcoin miners. Going to the second half, we will have a full view of the company's post-halving cost structures and profitability. We will also find out whether companies with large Bitcoin holdings will put those balances to work or continue accumulating it. And finally, momentum in M&A may continue to gather pace as power connections become increasingly valuable in the race to convert power into cash.
Much of the focus so far this year has been on the leading cryptocurrency, Bitcoin. However, altcoins are also moving into the spotlight. Luke Nolan is an expert on the sector and he joins me now. Luke, welcome. Luke, for those that are relatively new to digital assets, just tell us what's an altcoin?
We have Bitcoin, which is kind of viewed as the king of crypto. And then we have hundreds, if not thousands, of other tokens or cryptocurrencies, and those are what we refer to as altcoins. So a few examples might be Solana, Ethereum, Binance Coin, for example.
So what have we seen from those leading altcoins over the last 6 months?
Yeah, it's a good question. So I think there's two kind of phrases that we can describe altcoin performance this year. And the first one I'll use is capital concentration. So when we had the launch of the spot Bitcoin ETFs at the beginning of this year, a lot of retail and institutional attention was focused very much on those products, and they saw tremendous flows. That meant that kind of the broader market underperformed as capital was really concentrated into Bitcoin. And then, after that kind of wore off a little bit, we saw the opposite. We saw capital dispersion. And what I mean by that is the number of new tokens that are being created on a daily basis has never been larger. To put that in perspective, 1.5 million tokens have been created on the Solana blockchain since April. And so, for the retail crowd who are really chasing that next 10 or 100x from these micro caps, they're really focusing their capital on these much smaller opportunities, often speculative or meme tokens. And so when we look at the typical altcoins that have performed well in the previous cycle, I think their underperformance can be kind of attributed to that capital dispersion that we've seen recently.
So what should investors expect for the next 6 months?
Yeah, so I think for the next 6 months, a lot of attention is obviously on the newly approved Ethereum ETFs. There are, varying estimates on how many flows those products will see. But, with a good macro tailwind and positive flows into those products, we could see ETH outperform for a long period of time. And I think another evidence of that is looking at the ETH BTC ratio, which is currently sitting at its multi-year lows. So it's kind of a good setup if things line up correctly for ETH to outperform for a long period of time. Looking at other coins that have already performed well, I think the market has showed its hand, and those are likely to keep on winning. So the winners will keep on winning, and the ones who have underperformed are likely to underperform Bitcoin for the next 6 months.
Luke, thank you so much.
Thank you.
As we've already heard, financial regulators are taking an ever greater interest in digital assets. And so far this year, there have been a number of notable rulings that are driving the sector to new heights. Here's Townsend Lansing with his take.
So the first half of 2024 has proven to be both interesting and exciting for digital asset regulation, in particular as it affects exchange-traded products, or ETPs. If we break that down by jurisdiction, looking at the United States, we've obviously seen positive steps with the approval of the first spot Bitcoin ETF in the US. That obviously has resulted in a tremendous amount of flows. We've also recently seen the SEC relax its hesitation and ultimately allow an Ethereum spot ETF to be launched. We expect that in early July. So very good developments. Of course, in other areas, we don't expect the SEC to slow down its enforcement action, barring some type of legislative or judicial change. So that really means there's still a lot to watch. In Europe, of course, MiCA continues to develop a pace and be implemented in the various member states. We're seeing a lot of interest in stablecoins. We're seeing a lot of interest in other aspects of registration of digital asset providers. But overall, it's a very good sign that we're seeing a comprehensive and transparent regulatory regime arrive in Europe. Finally, the UK, some small green shoots, a bit of positivity with the FCA and the LSE finally allowing for a listing of a digital asset ETP. That's some good news. Whether we see that translate into other aspects of digital asset regulation is unknown, but indeed we have some good news so far. So the second half of 2024 should also be interesting. You're going to see the election in the United States, which should bring potentially some political change. We're also going to see some developments in the court space in the US. And of course, finally in Europe, we hopefully will expect further implementation of MiCA, and we'll see some good developments there.
So the first 6 months of 2024 has witnessed some significant changes in the digital asset space, and it seems the second half of the year may see continuing progress. I'm joined once again by CoinShares Head of Research, James Butterfield. James, what does all of this mean for investors?
Well, we've spoken a lot about Bitcoin itself, but how does Bitcoin behave in real-world portfolios? And we've recently published an article on our website discussing exactly that. So we know how Bitcoin performs in a sort of synthetic 60-40 equity bond portfolio, but how does it work in, say, some well-known portfolios such as the Yale Endowment or Ray Dalio's all-weather portfolio? And what we've found is Bitcoin in those real-world portfolios significantly diversifies and really enhances dramatically risk-adjusted returns Sharpe ratios. So a very positive thing there. There's a whole other area that we've not discussed though, and that's Bitcoin infrastructure.
Well, let's talk a little bit more about that now. Why is the infrastructure so significant?
Yeah, CoinShares is one of the world's largest investors in Bitcoin mining companies. And as part of that, we went on a due diligence trip to Texas to see some of the largest Bitcoin mining facilities in the world. We saw Core Scientific, Riot Blockchain, and a few others. And what I was really taken aback by is just how big these sites are. Riot Blockchain has a 1 gigawatt site. They currently have 100 megawatts enabled so far, and they have huge expansion plans. And that, I think, was very much a theme across all the Bitcoin mining companies. We saw just how much they're going to expand.
So what should we all be looking out for in the coming months?
Well, I suppose back to Bitcoin a little bit, definitely a knee-jerk reaction from the Fed is our core scenario there. Bitcoin, until that point, is unlikely to perform that well, with Ethereum perhaps taking the lead after the ETF launch. But once the Fed cuts rates more aggressively than most believe, I think it's likely to be very supportive for Bitcoin prices.
James, thank you so much. And that brings to a close this extended edition of the Market Update. If you have any comments or questions about any of the topics discussed, then please do contact the CoinShares team. And in the meantime, follow CoinShares for more insights.